most importantly, investors feel like it's an asset class that can provide alpha to their portfolios.
Hello, I'm John Janaro, Editor-in-Chief of IPO Edge. Thrilled to be back here at Nasdaq Market Site in Manhattan on this hot Monday morning. I've got with me a return guest. We've got Steve Parish, who is a managing partner at ICR Capital. Steve, thanks for joining us again.
John, great to be with you.
So let's dig into the IPO market. How did the first half, which is, oh golly, almost over now, how did it look compared to expectations?
I think, John, the first half of the IPO market ended up being not quite up to what the expectations were at the beginning of the year. In December, January, we thought we'd see more activity in the first half of 25 than we had in 24. But the market started off strong, and then with the tariff situation and some other uncertainties, we had a pause in activity. And over the last few weeks to a month, we've seen a resurgence in some very well-received IPOs. So overall, the IPO market activity is slightly below, on a year-to-date basis, the pace from last year.
Gotcha. And you might attribute a chunk of that, at least, to a few weeks when everybody was freaked out about Liberation Day, right? Because the market was crashing. No one was going to go public during those weeks, right?
Exactly. That caused the banks and potential issuers to really put the brakes on and pause. And people who had processes ongoing, put a temporary stop to them. So it wasn't in many instances, it wasn't easy to quickly resume those processes. So that really, put a damper on having a higher level of activity in the spring. However, and we can talk about it, recent transactions have been very well received, and the aftermarket performance has been very strong. On average, IPOs from an IPO price to current price are up 40% for the year, which is really strong.
Wow. Okay, so that
bodes well for the receptivity for future IPOs.
Okay, well, when you look at it by that metric, we are having a good year. I mean, that's good for people who bought after the,
Yes.
in the secondary market, right?
Exactly, and I think that gives issuers confidence that there's going to be strong reception for their issues, and bankers' confidence, and most importantly, investors feel like it's an asset class that can provide alpha to their portfolios.
Well, I was talking to a couple of market makers who I met with last week, and they were saying that Circle deal in particular really blew everybody away because it just kept going up and up and up. The secondary market trading was incredible, right? So right. That's what you're driving at.
Circle's a great example. Circle's up 170% from the IPO price.
I mean, that's extremely rare because, right? Yeah. Because I mean, people could have made
extraordinary performance.
People could have made a fortune buying it even a week after it started trading, right?
Yeah. And CoreWeave was one that initially did not trade particularly well and has since, surged.
Well, that reminds me, if we can peek into the backlog a little bit, because you know a lot of things that you can't tell everybody, but you can give us some hints about it. Are we going to see more companies in that AI world, in that crypto world in the second half?
Absolutely. The success of the AI and crypto, the IPOs that have happened, over the last few months has certainly given an impetus, but companies in that sector. So I think the companies that are confidentially filed with the SEC or preparing to file and are gearing up for the fall or early winter are certainly in that sector. But in addition, it's not just AI and crypto that have had recent success in the IPO market. There's been, it hasn't been the most active sector for issuance, but insurance. We've seen a few insurance IPOs that have been extremely well received as well, and healthcare from a lack of activity in healthcare last year. We've seen 3 or 4 successful in different areas of healthcare as well. So I think you're going to see more across the board. Certainly AI and crypto are 2 of the major will be two of the major participants in IPO issuance.
Now, Steve, I remember talking to you, it was maybe a year ago, about the IPO market, and you said, you know, John, there are a lot of companies that have been ready to go for a couple of years, and you also pointed out, you know, there's a cost that comes with that. You know, being ready to go on stage, you've got to keep your financials current, you've got to spend a lot. What's been going on with those kinds of companies? Because what I'm seeing are, you know, companies like Circle, you know, that's a unicorn. But what about some of these other companies, which are good companies, but they just couldn't quite pull the trigger because the market wasn't warm enough?
Well, that's a great question, John. A few of those have gone public.
Okay.
Like, you know, we were involved in one that had been started their process in 2022.
Yeah.
And
wow.
Had, you know, kept the financials current, and you know, finally they felt like there was a market window, and it was successfully executed. So I think, you know, a number of those are still, you know, seeking to tap the markets, and you know, but you know, others have also taken alternative paths, such as mergers or private capital raises.
Gotcha.
As well.
Well, last topic, let's steer it back to our favorite four-letter word, SPAC. Steve, what's going on? Recent news here, Goldman Sachs has re-entered the SPAC game, which I think surprised a lot of folks because, I mean, people didn't want to touch those with a 10-foot pole for a while there, but that's changing. And actually, that's not fair, Steve. There are some serial issuers who've done a bunch of successful deals, but it's nothing like the frenzy we saw 3 or 4 years ago.
Yeah. Well, there's a real momentum in the SPAC IPO market and SPAC merger market. To date, there's been just over 60 SPAC IPOs in 2025, which exceeds the full year activity of 2024. So there's a lot of now SPACs seeking merger partners. There's been a number of mergers. SPAC stocks or SPAC IPO, post-IPO SPAC stocks are trading well at a premium to the issue price. So, you know, as you mentioned, you know, it was reported that Goldman Sachs is coming back into the SPAC market, and some of the other banks that have stepped back, you know, that we're in dialogue with, I think we'll be seeing their participation as well. So I think it, you know, bodes well, and you know, we would say the SPAC issuers are more disciplined than they were in the previous era.
Is it fair to say it make the banks that stayed in the SPAC game look smart? You know, because they didn't all leave, right? Yeah.
No, there's some banks who have done a great job and have, you know, organized responsible processes to find acquisitions for their partners, and have created some robust public companies.
Nice. All right, Steve, I'm going to give you a hard question for the last one. What impact does all this interest rate uncertainty have on the stock market, and then as a corollary of the IPO market?
Well, interest rates always have an impact on the stock market, and the IPO market is a reflection of the stock market. So we've, you know, clearly seen stability of interest rates. Even more important to the IPO market is lack of volatility and stability. So the fact that, you know, interest rates have been relatively flat, and the VIX, which is an important indicator of IPO activity, has hovered in the 20% or high teens, which historically has been a good level, has been a level conducive to strong IPO activity.
All right, Steve. Well, we're going to leave it there. I think this bodes well for a strong fall. Let's hope. Fingers crossed.
Absolutely.
All right. Well, this has been a treat to have Steve Parish, managing partner at ICR Capital, back with us here at Nasdaq MarketSite. I'm John Janarone, editor-in-chief, signing off.